Hey folks, Vic Noble here, and I just thought I'd just make a quick video showing our results of our scalp trading for the past week, so you can get an idea, just of what exactly kind of what we do and our approach to it. So I hope you like that. If you do like it, I'd sure appreciate a thumbs up, and make sure you subscribe because we put these videos out quite often. And you subscribe and make sure that you click that little bell when you do so you'll get notified whenever we put out a new video. Okay, let's have a look at the trades. Okay, we'll start off with the CAD Swissy. That's the first one that we had this past week. And keep in mind, these support resistance levels have changed. Okay, they've changed since these trades were hit, so they're not relevant right now. But I'll just show you what we did, and that should give you a general idea. On the CAD Swissy, we had this buy down here. All of these trades are pointed out in advance when I'm available. But the ones I'm showing you, I did point out in advance. I posted screenshots to our members area before price got here, and this was a buy down at 69.57. This needed a 10 pip risk, and you can see what happened. It took off pretty good. It got up. It needed a 10 pip risk. Got up over 15 pips when it hit these levels up in here. I always recommend especially when you're starting off, do not lose money when you're up 1-to-1. It's okay to take a bit of profit because the profit potential is far higher if you go to an opposing daily level. So definitely a 1-to-1 there on part of your position at least, and then it came all the way back down. See, everything's going to depend on trade management. You can't sit there and stare at things when they're moving in your favor. You could move your stop to beneath these lows in here. You can take partial profit and move your remaining position to break even. There's different ways to do it, but trade management is huge. Let's look at the next one, which was on the Euro Kiwi. This was a losing trade, and I posted the sell rate in here, and there was just no chance to do anything about it. It just kept going up, stopped us out. That happens. That was our divergence, and also a pattern number 4. Simply didn't work out. On the Euro Oz, this was a beauty. The Euro Oz was right here. And here was the sell on this one. This was on the 11th of January. This was our divergence and pattern number 4 trade. The sell was here, needed a 15 pip risk. This went all the way down and hit the opposing daily level for a 6-to-1 reward risk trade. Those are like unbelievably good. And they happen, you just have, but now, be honest, if you took this trade on, what's your game plan? You have to have a trading plan. So would you hold it all the way for a 6-to-1, or would you jump out when you got up 20 pips because you got nervous and shaky and you didn't get, everybody does it different, but you have to come up with a plan that makes sense, because you can't be taking little tiny profits and then just taking full losses. You got to get the full profit potential, or something that's reasonable out of it, because and have a plan for doing that, not just a guess or anything. Okay. The Aussie Swiss was another one. Aussie Swiss, that one happened right here, and this was on the 12th. Again, posted it in the room for everybody. Here was the buy right here. This was a pattern 4 trade, and it needed a 10 pip risk. Went all the way up here. There was an opposing level up here at the time. It's not there anymore because price action's changed since then. There was a 3-to-1 reward risk on that trade. This is what I mean. We're taking on really small pip risk trades, like 10 pips, and away it went. And finally, the last one I have is a break-even trade on the British pound Japanese yen, the beast as it's known. This was a pattern 4. I posted it. We had a buy right here, and you want to look at the price action in here. Just watch this carefully here. We get filled. It goes down. It closes against us. It closes against us again. It pops up like this, giving us a little glimmer of hope, and then it comes straight down again. This is just bad price action. Actually, one of the members in our chat room pointed out, this guy's really doing well, and he said, all the price action with the closing below these are entry level, I'm taking it off for break even, which is the correct thing to do. And price spiked up, fortunately able to get out for break even, so there's a break even trade on that. I mean, if you add them all up, the depending how you manage a trade, so I'm not saying that anybody or everybody get this or anything, but there's a 8.5-to-1 reward risk trade just this past week. So those are the kind of potentials that you can get with these small pip risk trades. And I can tell you that in Darko's day trading service, just to let you know about that, they ended up with a profitable week too. Now, not everybody does because of trade management. I can tell you though that the stage 4 traders are very, very good at trade management and ended up with a profitable trading week. We get into these trades with high odds trades, high odds, probability of winning, and then after that, it's all about trade management. So there you go. I hope that gives you a little bit of an idea of kind of how we approach it and how we take on these small pip risks, and because these small pip risks can mean really, really nice reward risks when the prices move for you. And even if they don't move much, generally we can get the risk out quite quickly. Okay, you can get more information. There's a link below this video, in the text below this video, to our coaching site, or also in the email that you received. So you can check that out. If you have any questions about any of it, yeah, shoot me an email. I'd be happy to get back to you. And again, if you like the video, I'd sure appreciate a thumbs up by hitting the like button, and also make sure to subscribe. Good enough, you guys. I hope you've all had a nice weekend. Let's see what this week brings. Thanks so much.